Everyone's betting on a Fed rate cut this September. Crypto Twitter is already celebrating. But what if they're wrong? What if Jerome Powell decides to keep rates high, even if it wrecks markets? At the Jackson Hole Summit, Powell's speech sounded bullish at first, but hidden inside were cautious warnings Wall Street might be ignoring. Today, we'll break down why a no-cut scenario is still very real, what that means for Bitcoin and Ethereum, and how one overlooked detail could flip this entire market overnight. Let's start with Powell's recent speech at Jackson Hole. On the surface, he told us what we wanted to hear. Inflation has cooled, the labor market isn't overheating anymore, and upside risks are lower. The markets rallied. But if you listen closely, his message was far from a green light. He admitted unemployment is up nearly a full percentage point, something that almost never happens outside of a recession. And instead of promising cuts, he kept the door only slightly open, saying only if the data supports it. That's a big deal. Because right now, the Fed is laser focused on hitting 2% inflation, no exceptions. That's their new framework, no more letting inflation overshoot. Which means Powell can use every excuse to delay cuts, even if markets beg for it. But what does the data actually say? Because that's where things get scary. Sticky inflation is back. The Fed's favorite inflation gauge, PCE, climbed to 2.7% year-on-year, closer to 3% than 2%. And it's been rising since April. CPI core inflation just hit 3.1%, the biggest monthly jump in 6 months. Producer prices, PPI, soared from 2.5% to 3.2%, and when producers pay more, consumers pay more a few months later. Translation: inflation could re-accelerate into the 4% zone by year-end. And let's not forget Trump's tariffs. The US imported $3.3 trillion of goods last year, and higher import taxes will bleed into prices. Deutsche Bank analysts even point to the ISM Services Prices Index, a reliable leading signal, flashing a warning of CPI spiking above 4% in the coming months. That's the exact nightmare scenario for Powell. And if inflation trends back up, there's no way he'll cut. So if inflation keeps rising, maybe the labor market can save us, right? Not so fast. Jobs data is sending mixed signals. On one hand, unemployment is still low at 4.2%. But payroll growth has collapsed, just 73,000 new jobs in July, way below expectations. Even worse, the last 2 months were revised down by over 200,000 combined. That should be dovish, right? Normally, slower hiring means room to cut. But wages are still climbing nearly 4% year over year. Higher paychecks sound good for workers, but they risk fueling more inflation. So Powell's dilemma is this: weak jobs, rising wages and sticky inflation. That combination screams wait and see. And he's not alone. Fed officials like Alberto Musalem and Jeffrey Schmidt openly warned, inflation is still closer to 3% than 2%. In other words, don't count on cuts just yet. And here's the kicker: even if cuts do come, markets might still be wrong about how big they'll be. Right now, futures are pricing an 86% chance of a September cut. But markets often get ahead of themselves. Oxford Economics even warned investors are way ahead of their skis on how aggressively the Fed will ease. If Powell cuts, risk assets like crypto might pump, but that pump could backfire, reigniting inflation, and setting us up for pain in early 2026. If he doesn't cut, expect a sharp sell-off. Markets always overreact first, then settle into reality. And remember, September is historically crypto's worst month anyway. Traders even call it Wrecktember. So combine bad seasonality with a potential Fed disappointment, and you've got the perfect storm. So, what happens if Powell says no cut? Short term, expect pain. Bitcoin could retest $50,000 or lower fast. Altcoins would bleed even harder. But long term, I don't see the dip lasting. Trump is expected to replace Powell in 2026 with someone eager to slash rates aggressively. That could mean a massive liquidity wave, and the start of crypto's next explosive cycle. So the real opportunity? Use any September dip as a chance to accumulate. If cuts don't come now, they'll come later, and when they do, the rocket fuel will be there. Here's the big question: do you think Powell will cut in September, or hold the line and wreck the market? Drop your prediction in the comments, I want to see where you stand. And if you want daily updates on how the Fed, inflation, and politics are shaping the crypto market, hit subscribe right now, so you don't get blindsided when the next move hits.